Peter Lynch once said that if you can't explain in a few sentences how a company makes money, you probably shouldn't own its stock. That sounds almost too simple. After all, aren't the biggest investment opportunities hidden inside cutting-edge technology and complex financial models? Surprisingly, Peter Lynch believed the opposite. He built one of the greatest investing records in history by looking for businesses that ordinary people could understand. Think about it. Every day, millions of people buy groceries, eat at restaurants, shop for clothes, and use household products without giving it a second thought. Lynch saw something extraordinary in these ordinary experiences. He believed that being a customer often gave you insights long before Wall Street analysts noticed them. If a store is always packed, a product keeps flying off the shelves, or everyone around you starts talking about a new brand, those observations could become valuable investment clues. The real advantage wasn't simplicity for its own sake, it was understanding. When you truly understand a business, you're less likely to panic when the stock price falls. Instead of reacting emotionally to scary headlines or market volatility, you can judge whether the company's actual business is still healthy. That confidence is incredibly powerful, because investing success is often determined more by behavior than by intelligence. Imagine two investors. One buys shares in a company developing highly specialized technology they barely understand because everyone says it's the future. The other invests in a business they've watched grow for years, one with products they use every week and customers who keep coming back. When the market suddenly drops 20%, which investor is more likely to stay calm? Usually, it's the one who understands what they own. This idea is closely tied to Lynch's famous principle: invest in what you know. That doesn't mean buying stock in every company whose products you like. It means using your everyday experiences as a starting point for deeper research. You still study the company's financial health, its competitive advantages, and whether its growth justifies its price. Familiarity sparks curiosity, but research confirms the opportunity. Many investors make the mistake of chasing complexity. They assume that if an investment sounds sophisticated, it must be better. Lynch challenged that thinking. Complexity often creates confusion, and confusion leads to poor decisions. Some of the greatest businesses generate enormous wealth through remarkably straightforward models. They solve everyday problems, serve loyal customers, and consistently earn profits year after year. The lesson is timeless. You don't need to discover the next revolutionary technology before everyone else. Sometimes your greatest investing edge comes from paying closer attention to the world around you. The businesses you understand today may become the investments you confidently hold for years. And in investing, confidence built on knowledge is often far more valuable than excitement built on speculation.